Good morning, everybody. Hey, welcome to Thursday. It is September 8th, and we finally put together a green day yesterday as the markets had a pretty good day, over 1% across the board and more. And we'll talk about that when Dave joins us here in just a few moments. Before we do, though, let's just remind ourselves that there's not a lot of things out in this world that we can control. However, you can control the amount of risk you have in your current portfolio. The problem is you have to know how much risk you need to have and how much risk you do have in order to fix it. Give us a call at 863-382-0037 to schedule your core retirement design, where we help you design the retirement you always dreamed of. And we got that. We got Dave up next.
5.7 Light FM. It's a crowded house. It is sometimes around here, isn't it? 8:40. I'm not too crowded to get in a look at money and see how Wall Street's treating your IRA and your 401k today. And, well, yesterday it treated it pretty well, and I have no real understanding as to why, unless it was about darn time somebody bought something. Let's go down and check in with Phillip Statler from Statler Financial Services and see if he's got a better take on it. Phillip, good morning. How are you?
Hey, I'm doing well today. Yeah, yesterday, the first day, we finally, in 3 weeks, I think we finally get a decent green day.
Yeah, I can't even figure out why, but boy, was it good. The Dow was up by almost 1.5%, up 436. S&P was up by almost 2%, up 72, and Nasdaq up 2.1%, up $247. Boy, you'd think happy days were here again, wouldn't you?
Yeah, you would, and I was thinking that way earlier this morning, but futures have gone back red. I just don't get it. We just can't stay consistent here.
I'm kind of wondering whether it's a reaction to all the things that the Fed governors have been saying. My tip sheet today just loaded up with quotes. I mean, everybody heard the Jay Powell speech saying the beatings will continue until morale improves, and we're going to keep raising rates until the job is done. I got a quote from the vice chair of the Fed, Lael Brainerd, the lady that scared the crap out of all of us when President Biden appointed her. She did a speech yesterday, and she said that profit margins in several industries remain elevated after last year's boom, and she plans on making sure that they have lower margins in the future. Isn't that kind of them?
You know, I for some reason, I thought we were still in a capitalist society, and I didn't think that was the government's realm to start dictating what everybody's profit margins need to be.
You ain't reading enough news lately, brother. Then the bozo that runs the Minneapolis Fed, Kashkari, last week he said he prefers the market reaction we were having a couple of weeks ago after the Fed's July meeting. He doesn't like the rally that happened right after the July meeting. He much preferred what happened to us in August to see the market go into the tank. And I mean, wait a minute here. The idea isn't to make us all poor, I didn't think, anyway.
It definitely seems to be, based on what the Fed's saying, because, and I think they forget this point. They think that only the wealthy people have money in the market. Everybody that's got a 401k has money in the market. And that's all the way from the little guy working at a shop, that's only putting $20, $25 a week in, to the other people that are maxing out their 401ks. They all depend on that money for their retirement. And it's just, they forget that. They forget that the little guy has money invested too, and they're hurting them as much as they're hurting anybody else.
Well, that's where I get impatient with the notion of whenever we get into the political season and people start talking about greedy stockholders. I'm sorry, I'm poor as a church mouse. But I got a few, I've got a few mutual funds in my IRA, and I've got a little annuity set up, and all of them are dependent upon various investments the annuity carrier is making on my behalf in order to get me more money down the line. Yeah, I've got a guarantee, but I'd kind of like to have the annuity beat the guarantee, and that's going to happen when profit margins and stock prices go up. I guess that makes me a greedy stockholder, even though I'm 1 foot out of the grave financially. But I've got a little, and I'd kind of like to see it grow a little bit, wouldn't you?
Yeah, you'd like to see it grow and not go backwards, right?
Yeah, it just strikes me as a good idea. I've always said, okay, fine. I moved my investments into some really, really conservative options, and when things tanked down 20%, my IRA was only down 7%. So fine, I did pretty well because I'm invested conservatively, but that also means I don't have quite the upside risk. So when everything tanks, my upside risk kind of goes to heck as well, and I don't really like hearing that coming out of my Federal Reserve.
Exactly. They really, yeah. Well, we bash on them all the time because they
This
deserve it.
isn't the, yeah, this isn't the talk radio station, but you and I could get into that in a hurry, couldn't we?
We really could.
Start,
Yes, sir.
absolutely. Anyway, it looks like yesterday was kind of a thumb in the eye of the Federal Reserve people that were saying, hey, sell stocks. We don't like you guys anymore because we sure went up. Start out this morning, and I'm afraid we're looking at another good news, bad news situation because the job market looks well, let's just say pretty doggone healthy. We had the best initial jobless claims number out in something like 8 months, 222,000, almost 20,000 less than the market expected. And the continuing claims is still holding just incredibly steady at 1.47 million. We've still got a heck of a lot more jobs out there than we have people that are claiming unemployment. So, the employment market is still nice and hot. That ought to give Jay Powell reason to whack us with, what do you figure? 1.5% increase at the end of the month?
let's just double the expectation, right? Yeah, I mean, I was reading an article today. That 0.75% seems to be the number, but we keep getting good news, which is not going to help the Fed keep that rate. I mean, I would not be. Well, I would still be surprised if they raise it 1%. That would, but it could. I mean, it's definitely a lot of good news is coming out, and based on the rhetoric we're getting from the Fed, I'm sure that a lot of them are voting for 1%.
Yeah, and that's the thing, and and I guess that's heartening because neither one of us really saw much meat out of the Open Market Committee meeting minutes that were released at 2 p.m. yesterday afternoon. What I've been able to glean is that basically there were no surprises in it. The market pretty much looked at it, said, okay, paused for a minute to read the high points, and kept on going up. So there were no surprises in that, which kind of tells me that if 0.75% is expected, we kind of sort of have baked that in.
Yeah, and I got a news tip this morning that said the European Bank, they raised their interest rate 0.75 point overnight.
And that would also tend to confirm that, at the very least, since these bankers do talk, that's kind of sort of where our guys are thinking as well.
Yeah, I think so. And let's remember they started at a minus 0.5 point this year, and so now they're up to 0.75%. They actually,
yeah. At this point in time, about the only country that's doing stimulus and reducing interest rates is China. And we were talking about them before we went on the air, that they're still doing COVID lockdowns. And that kind of explains, and I've been guessing for a while, that that's probably why we've been seeing a decrease in the price of oil because of expectations of lower demand. And China's growth rate is still not what they want it to be. And you've read that they still have expanding and continuing their COVID lockdowns, right?
I did. I saw an article that really was talking about oil, but the reason they're saying that oil prices continue to go down is a demand issue, that the demand coming out of China just continues to fall as they really continue to lock down things because of COVID.
And I know that across the pond over in Europe, the first official act basically that the new prime minister in Great Britain did was she put a cap on energy prices. So there's a price cap on them, which also could at least warp the supply-demand curve a little bit.
Yeah, and so we continue to watch the things in China, and it does affect oil prices, obviously, but it also affects other things, right? Because that's a main source of our supply chain when it comes to a lot of stuff, right? And so if they're still locking down and closing manufacturing, and it just gives credence that we're going to have a long haul before we get the supply chain issue thing fixed. And you got to wonder why China doesn't just do like the United States and just let's run, let's get through it. Let's do what we need to do. Let's free our people and let's get back to work, whatever it takes. I mean, we've managed through it. Why can't other countries, why can't China manage through like we have?
Yeah, no government, no expert on Chinese culture, or for that matter, the mechanics over there. I got to assume it's simply as much as anything, the population is so doggone dense over there that a small outbreak is more dangerous in their eyes than it would be even in our eyes. I mean, we're not exactly, sparsely populated over here in the States, but compared to China, we're a desert.
Yeah, I guess so. That's true. That's true.
It's just a wild guess, but it makes some sense. I suppose they have a reason for overcaution, but I think all of us would probably agree it's an overreaction. Nevertheless, it was a weird day yesterday because based upon all the stimulus coming out of the Federal Reserve, things should have gone down, but they went up, and we're awful darned happy they did. Have we got any reports this morning that can give us any stimulus to buying something today on Wall Street?
We got a couple things that came out. There's a company called Asana, and it's a communication software company. And I've heard of them. A lot of people use Asana to put things together. And they had a really good quarter. They beat on their top and bottom line. They came in like they were expected to lose 34 cents a share on revenue of like 135 million. But they came in a lot better than that. So they're actually, man, they're killing it this morning. They're up 24%.
Ooh, I got to say, I'm unfamiliar with them. What kind of industry do they service?
They're so they're a platform that companies can use so they can kind of communicate across large areas.
Okay.
And do like project management type stuff, and those type of things. They're probably one of the first companies to do that. They're like a Slack or even Teams on Microsoft Office. But Asana was, I think it was probably one of the first companies to get into that type of software.
Decentralized project management stuff.
Yeah, there you go.
Okay.
Then we had American Eagles report overnight, and they well, not so good for them. They missed earnings by 9 cents a quarter. Revenue was a little down. They continue to have a rough time. They're having to increase promotions to get people to buy their stuff. So they're trading down about 12% this morning. Actually, right now they would open at a new 52-week low.
Ooh.
Yeah.
Well, let's look for some more good news, shall we?
I can't find any, Dave. The last one I have for you today is Dave and Buster's.
Okay.
Dave and
the
Buster's.
Pizza guys.
Yeah, well, the game, the game place where you can, the arcade bar. They did post better than expected quarterly revenue on the top line, but I'm assuming they didn't quite make it on the bottom line. Their same store sales beat expectations. So I'm not sure where the little miss is for them because they're trading down 3% this morning. Yeah, I'm just not sure. I can't see it in any of the reports I'm reading, but there must be something in between the pages there that the traders aren't liking.
That or some of their stockholders are reading the same tip sheets I am, and I'm honked off of the Fed this morning. Resetting the table. It was a good up day yesterday on Wall Street. I'm seeing changes in color even as I speak on my delayed quotes. Phillip, 45 minutes early. Where are we going so far?
So we got some red ink this morning to start the day. Not a lot, but still red nonetheless. The Dow right now is down 0.1%. The S&P 500 is down almost 0.25%, and the Nasdaq 100 is down almost 0.5%. So everything is definitely in the red. If I look on the other side of the coin, the commodities front, we got silver actually back up 0.8%. Gold is flat. Crude oil is up almost 1%, $82.69 a barrel right now.
But that's a pretty substantial decrease from yesterday when we get down into at the end of the $82 numbers. So that expectation of lower demand out of China is definitely pushing the world prices down.
Absolutely is. It really is.
Holy crud! The Brent crude, which always runs $5-6 more, it's under $89 this morning.
Yeah.
That borders on the amazing. World markets mixed bag in China. Japan was up markedly at the end of the day at 6 a.m. this morning. The rest of the markets on the Asian rim mostly off by a bit. Europe is just kind of frittering either side of the zero mark. England is flat, dead, even at zero this morning, to give you an idea. German markets are off by a bit halfway through their day. Trying to figure out where to go. We get stimulus from the Fed that says sell and everybody buys. I can't figure out what's going on. That's a weird way to try to count on retirement. How do I find you to get a plan I can count on, Phillip?
Yeah, that's one of the reasons we developed the core retirement design to help people design the retirement they always dreamed of, watching out for the amount of risk they really should have in their portfolio. Give us a call at 863-382-0037 to schedule your core retirement design session. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning on Light. Thank you so much, Phillip. We'll see you then, all right?
All right, buddy. Have a great day.
You too. Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Again, folks, I want to thank you for joining us today. I hope your week is going well. Join us again tomorrow, same time, same place. Until then, have a great day.